Okay, so basically, like I mentioned before, this is just a class for like beginners, okay? And I've been posting a lot of stuff about my stocks and some plays that I've been and doing well on and hitting, and it's not like for me, what I learned, the best part about or the best thing about stocks is that you can win a lot of money, right? There's no limit to the amount of money you can win, but vice versa on the opposite side, um there's money that can be lost as well too. So what I learned was I'd rather hit small consistent gains every day of like I'm talking like if you're just starting, if you could just on every play that you buy and sell, if you could trade at a positive, even if it's $5, you're doing good. Okay, some guys, like especially me in the beginning, I was able to hit maybe 2,500 in one day. That's good. And, you know, you'll see that and you'll be like, oh, I want to do that too. But in reality, I'll hit that. And then the next day, I'll maybe lose 90. And then the next day, I'll maybe make 20. And then the next day, I'll make maybe 500. But then the next day, I could lose 200. So you got to see that with trading stocks, if you're not millionaire already or like a multimillionaire, you don't have a lot of capital to invest in, you're only starting with like 500 or $1,000, even less than that. If you're only starting with that, your goal is to make small, consistent gains. It's not to say, oh, I'm gonna put $9,000 into Tesla and I'm gonna hope that it raises it raises like $100 and then you're rich, right? But that's not how it truly works in the beginning. So that's what I'm trying to show you guys and teach you guys today is like with with beginner traders, your main goal is to be in the green. Okay, even if that's making $1 a day, $5 a day. You got to learn how to not chase, and you can't get greedy. Okay, so as I go through kind of like my notes on what I have today, as I go through it, I'll explain a little bit in detail, but at the end, if you guys have any questions, um you can, I guess, everyone's, I can see you guys typing it right now, so if you guys want to just type your questions, you can type it. I was gonna say save your questions to the end, but since you can type it right here and I can see it, you're not gonna interrupt anything. Just go ahead and type it, and if I feel like I can answer it right then and there, and it won't kind of distract what's going on, then I'll just answer it. Okay, so uh basically, just to start off, you want to get started with a platform. Okay, everybody knows that. Everybody probably has Robinhood. Most of you guys on here, beginner traders, right? But you probably heard of Robinhood if you didn't already download Robinhood and you haven't started trading for yourself, right? So, my opinion, if you're like day one, uh, and you just want to learn about stocks and maybe you want to do a few trades here and there for like $200, okay? I would say Robinhood is the easiest to learn because it's so user friendly. Okay, it's like um, okay, so with it being so user friendly, it's like it's really good for beginners because you can't really get too confused with the numbers because when you get into options, okay, right now I'm just going to teach you guys about trading regular shares because options is kind of like the next step above a beginner. So when you trade options, that's when you want to use a more advanced platform. Okay, so the one I use right now is called Thinkorswim, and that's a platform or a software designed by TD Ameritrade. If you want, and you know that you're the type of person that's going to say, I'm going to give 100% into doing this. I'm going to dedicate a lot of my time. I'm going to dedicate a lot of my, not a lot, but maybe, a portion of my weekly or biweekly checks that you make from work. If you know you're going to be all in, then I would say maybe start trading regular shares on TD Ameritrade. Maybe skip the Robinhood because when I made a lot of the I guess I would say like the home runs. Okay, I'll call them home runs where you make like 2-3 grand in one day. That's like swinging for home runs. And I did that with all options. I didn't trade regular shares. It was when I just started off, but I have some knowledge in the market because I've done regular shares trading before. I've just never done options. The first time I did options was in November. But what I can say is I started on Robinhood and I hit a few home runs early to the point where I got really confident and kind of cocky and I thought I knew everything. And then I would buy options that were like maybe 80% of my total buying power. I would buy an option. If it started going south and it started going the wrong way, let's just say I had 5,000, 80% of that, right? So if $4,000 is starting to go like completely downhill, you could just end up with 1,000. And like with options, you could literally trade it to where it hits zero. So if I put $4,000 into something, I could literally get back zero with options. That's why it's safer for beginners to just trade regular shares. Okay. So if someone, like you have a friend or you see someone else that you kind of look up to and they're doing options, yeah, they're making big money. Yeah, they're hitting those home run plays. But like I said, you'd rather right now, since you're beginning, you'd rather not want to lose $4,000. Who the hell wants to lose $4,000? Nobody, right? So for now, I would say stick with the regular shares, trade on Robinhood because it's so user friendly and so easy to it's so easy to just function throughout the whole not even the website, on the phone too. It's so easy to get to. So let's go let's just say TD Ameritrade or something like that, right? um if you just trade regular shares, it's not too advanced, but when you start getting into options, you'll realize that Robinhood makes it a lot easier for you to access the options. But technically, that's not good if you're a beginner, because if you can access options so easily, it makes it feel like, oh, this is so easy, I can do it. And then once you start doing it, you kind of get, it's kind of almost like addicting. That's why you kind of get addicting to winning on options, because you can win big, but you can also lose big. With regular shares, let's just say I put $100 into regular shares. The shares aren't going to be dropping like tens of dollars at a time. There's no way. Shares drop like cents at a time. And if you're not doing long-term trading and you're trading short-term and you start to see it go down, you can just sell it right away and you'll lose like $10, $20 maybe, not even, okay? Maybe like if you're a panic seller like me, I just sell it fast. If it starts going the opposite way, I just sell it fast. Okay, I'm out of here and I start back fresh again. So I'll explain the difference between long-term trading and short-term trading pretty soon. But basically, you find a platform, and I would say Robinhood is the easiest to use, and TD Ameritrade is probably the second easiest to use. I use TD Ameritrade for options and my regular shares, but I also do have a Robinhood account just to do some regular like penny stocks and stuff like that, just to have um, an account everywhere, just in case my money gets tied up with Thinkorswim or TD Ameritrade. Uh, if my money gets tied up there, then at least I know I have money in my Robinhood just because, right? Because you never know. One day you're gonna wake up and you're gonna see that um, freaking GameStop is all over Reddit or something crazy like that, and you're gonna want to jump in. So if you have two separate accounts on two different platforms, that gives you the luxury of just saying, okay, I'm gonna use this account to mess around with these YOLO GameStop types shares, and then my TD Ameritrade will be more serious, long term investments or something like that, right? Um, so the difference right here, I'm gonna go over the difference right now. There's swing trades and then there's day trades. Okay, for swing trades, this is something that I would recommend everybody here to do first. Okay, swing trade meaning you buy a stock on one day and you sell it sometime in the next day to the next week to the next month. You're swing trading it. Okay. You don't want to day trade too much in the beginning. You kind of want to see how stocks can move long term. So if you look at a stock, okay, like GameStop, like for example, and it went from like let's just say it was at $5, and all of a sudden the next day is at $160. Okay, the odds of that happening in a regular stock is like very unlikely, but the chances of or let's just say if you were holding some shares at $5 and you were swinging it, right? So swing trading means you can sell it any day after that same day. So if you're swing trading it and it goes up 5 cents and the next day it goes down 10 cents and the next day it goes up 1 cent and it just fluctuates between those 10 cents, okay? you should, if it's a company you believe in, I'm not using GameStop anymore, but I'm just saying if it's a company you believe in that you feel like it's a strong company, maybe they're coming out with vaccines, or they're a cannabis company and it's about to be legal in the state that they're based out of, something like that. If you know that there's good news and the company has maybe a good earnings or something like that, and you know that eventually sometime this company is solid and it'll be worth a lot more, my advice would be swing trade that, buy it when it's $5, and literally hold it until that big news comes out, until the state um, bans, or the state takes away the ban for recreational marijuana use, or if you're into a company that has maybe vaccines, right? And you just found out they're releasing their new vaccine this Thursday. Probably hold it till Thursday, or hold it till the news that you're kind of watching. So don't, like, my biggest advice would be, don't buy a stock because your cousin's best friend said so. You know what I mean? There's no legitimate cause or reason for you to buy that stock. So if you don't do your own research, I would say don't invest in the stock. Even if everyone's talking about it, it's the biggest thing in the world, because by the time everyone's talking about it and sharing it, it might be too late. So what happens is, everyone's talking about it, you jump on it, next thing you know, 2 days later it tanks big time. It's because all the people that jumped on it to 2 days before you got on, they made the money from when it jumped like $100 in the shares, or like maybe like even $30 worth of the shares. When you buy the stock like a little bit too late, you missed that wave, guys. And then you're literally gonna buy a stock that went from $5 to $60. And since it went from $5 to $60, you're like, oh, maybe it's gonna go from 60 to 100, and then it goes back from 60 to 20, and you'll lose all of that money. So if you have 100 shares, that's 60 to 20, so that's $40 per share. That's $400 just gone out the window. You never see it again. So that's why it's like, don't pick a stock just because everyone says so. Okay, make sure. Oh no, it's okay. I know you keep getting disconnected, but every time you get on, I'll just keep bringing you back on. But yeah, okay. So basically, do your due diligence, right? Look at the company. A good site to look at is Yahoo Finance. They give you all of these all of the news on these pretty hot stocks, right? Another one of my favorite ones is called earningswhispers.com. Okay, so I'll type it in here, earningswhispers.com, and I'll show you guys how to use this. Earningswhispers.com. Okay. Oh shit, I didn't send it to everybody, I think. Oh no, it's everyone. Can you guys see? Let me know if you saw that. If not, I'll do it one more.
I did.
Okay, I think I did it to direct. Is it still direct? Everyone, my bad, my bad. Stupid. Earningswhispers.com. Okay, check out that site, guys. Earningswhispers.com. After you're done with this and you really want to get into a stock, or you really want to start trading, if I learned about Earnings Whispers my first day of trading ever, it would have changed everything. Okay, Earnings Whispers gives you an estimated earnings report of every company that's coming out with earnings that are publicly traded. Okay, if you look 2 weeks in advance and you see that, like, let's just say Apple has record breaking earnings and it's 2 weeks in advance, and right now Apple is kind of trading low compared to its highs. Like, let's just say its high was 130, right now it's at like 110, and Earnings Whispers say in 2 weeks it has like their like 100% return, or 100% earnings, more earnings than the year before, the quarter before. If you see that and you see that Apple is trading low, you should go all out on Apple, because more likely than not, if they have good earnings, people are going to buy. So when everyone starts buying a stock, the value raises, and the value raises until the day where the earnings come out. It should go break to the moon. You guys can sell it there because if it breaks a new high, everyone's going to start selling it. Now, that's me, my strategy, because I'm a panic seller. I don't want to be too late, right? I want to sell too early rather than too late, because too early means I still make money. Too late means I was like, no, it's gonna go back up. No, it's gonna go back up. No, it's gonna go, and then you're fucked already. It never goes back up, right? So earnings whispers is a good one for you guys to check out. I wish I knew that the first day when I was trading. I had no idea that even existed. So um, that would be good for you guys. So basically, if you're doing swing trading, I would say uh, pick a buy target and a sell target. Okay, that means you see Robinhood or Thinkorswim, TD Ameritrade. You see the charts, and if you see, let's just say you're looking at like a 90-day chart, so you get the last 3 months. In the last 3 months, you see mountains go up, down, and it has a new mountain, a little bit higher than the last mountain, down, and then the third mountain, it has a little bit higher than the second one, and it comes down. That's called an uptrend. Okay. If you see that a stock is on an uptrend in 90 days, that's like a long-term uptrend. If it starts to go down right here and it doesn't break past the second or first mountain on the low, that means it's probably going to continue that uptrend. Okay. So you should pick a buy target for yourself to say, this one, the mountaintop hit $27. It came back down at 22. The second one went up to $29. It came back down to 25. That means the third one, if it goes to like 31 and it starts to get back down to 27, that's your buy target at 27, because more likely than not, it's going to continue this same trend that has been going on. Okay. So maybe I'll do another class on how to read charts kind of in depth, because that kind of takes longer. So if you guys want me to do a class on in-depth training, I'll do that one, because the charts, I'll know that if the second mountain comes down to 22, the first mountain came down to 22. So if the second one comes down to 22 or lower, I wouldn't buy it yet, because it's not on a trend anymore. It's not on the staircase, right? It's not on a stair. It kind of goes here, low, high, low. That's more for day trading, okay? But if you look at if you look to do swing trading, pick a buy target, which is at the bottom, like of that mountain I was talking about. And then pick a sell target, meaning if the last two mountains were 27, 29, when it hits 30 or even like maybe 31, but for me, I'm panic seller. If I buy it at 25 and it goes up to 30, fuck it, I'll sell it. That's $5 times 100 shares that I made. That's $500 done already. I made $500. I'm happy, right? So just remember to pay attention to the long-term trends, right? Just because you bought a stock Monday and it goes down on Tuesday doesn't mean it's going to go down Wednesday, Thursday, and Friday. You just got to look long-term. Just because it went down Tuesday, what if that was the bottom of the new mountain, and then you're going to ride it to the top? If you panic sell without looking at your charts, then that becomes bad. You know what I'm saying? So make sure that you look long term, and if you see an uptrend when it hits down before it's, I mean, even if you hit it on the 25 and it starts going up to 25.50, just buy it there, because more likely than not, it's following that long-term trend, right? So that's swing trading. Okay, the next thing you have to know as a beginner is day trading. So once you unlock day trading in um, TD or Robinhood, Webull, whatever you want to use, once you unlock day trading, I mean, yeah, I'm pretty sure you have to unlock it. I forget already. So once you unlock day trading, you might not have to. You might only have to unlock options. But day trading means buying and selling a stock in the same day. Okay. You can, if you have a cash account on TD Ameritrade, you can do that as much of like you can do that as much as you can for how much money you have in your account. Okay. So if I have $500 and I spent $400 worth of shares and I sold it that day, I can't use that money to buy more shares and day trade until 3 days later when those funds get back to my account. Okay. So, um, hold on real quick. What's going on? Okay. So anyway, I got 10 minutes left. Perfect. So anyway, that's day trading when you buy and sell a stock in the same day. So you're going to want to know how to day trade when looking at a 1 minute 1 day chart, meaning you don't want to look at 90 days because you're day trading. So you're gonna have a buy target and a sell target, but it's gonna be like a lot lower. You know what I'm saying? It's gonna be a lot, not lower, smaller is what I'm saying. That means if it usually goes within those 10 cents, that's what you're going to day trade. You're going to buy 100 shares here and it's going to go up 10 cents. And then, you make $10, whatever. But that's a day trade, right? You want to just be in the positive in day trades. Okay. So if you look at, um, if you look at a chart and it's like a smaller, like a 1 day chart, that means like you see how the chart moved yesterday, and then you can see how the chart moved today, the day before. You kind of get a short-term chart, not one of those 90-day mountain charts. I'm talking about a short-term one. So if you see a stock that usually goes like small mountains every day, that's a good stock to day trade, and you should probably practice with something that's like four to $10 around there. Buy like 100 shares or buy like 20 shares, whatever you want to play with. But buy it on these little zigzag mountains, buy it on the low part, and then sell it when it comes high. And if you just want to try one, even if it goes up 5 cents, sell it in practice. Make your $5, make your $2, whatever. Just it's just so that way you get consistent positive gains until you come up with the money to trade options and kind of go bigger. You know what I mean? Okay, so if you're using TD Ameritrade, use a cash account. Don't use a margin account. You guys can go research what that difference is. It's pretty simple. Cash account means the funds didn't settle, or you have to wait till your funds settle. Margin account means when you sell a stock after you bought one, um, that money goes instantly back in your account, even though it hasn't settled yet. Robinhood just says, "Here, I'll front you the money. I'll let you borrow the money until the money comes in because I know you're good for it," right? So that's what margin is. I wouldn't recommend that if you're a beginner. Okay. But the one of the last things I'll talk about is paper trading. Okay. If you're a beginner and you put $1,000 in, be ready to not end up with $1,000 anymore. That it gets dangerous. Like you just never know when stocks go crazy and it could tank, or you could buy it and it goes up and you're all happy. I'm gonna hold it one more day, and the next day you wake up in the morning, boom, it's gone. So my advice would be to practice with something called paper trading. Okay, so I'm gonna type that in. So paper trading. That's another one that you should practice with first before you actually get onto doing regular money, right? Like real money. Paper trading means that they give you an account with fake money, like monopoly money, and you're just playing with fake money, but you're learning to read charts. You're learning your risk reward, the volatility of the stocks. You're learning kind of like what kind of trader you are personally, right? You get to really figure that kind of stuff out about yourself. You get to see, am I more riskier, or am I more like a panic guy? I want to make small gains every day. You can kind of test it out. So go to Robinhood or TD Ameritrade and go to paper trading. Okay, go to earningswhispers.com, look at the earnings, paper trading, practice money, and then I would say do swing trading at first, where you buy a stock that you heard good news on, like Earnings Whispers, and you wait till the 2 weeks when the earnings come out. But anytime in between that 2 weeks, if you have your own personal sell target, which is like maybe like I think it'll go $2 higher than the last all-time high, then sell it $2 higher. Don't sit and say, this is the biggest mistake you can do. Oh no, I'm gonna ride it. It's gonna keep going. It's gonna keep going, because stocks can tank like that. What happens is a millionaire just sells a million shares of a stock, and it goes from like, oh, $50 a share to $30 a share because this motherfucker sold all his shares. That means the value of the stock will keep decreasing. Okay, so remember that. Um, Sell when you want to sell. Don't sell when don't just wait. Don't hold stocks. Just sell it in the beginning, and until you get more comfortable with holding. Because I'd rather say, oh damn, I only made 50, I could have made 70 if I held, rather than, oh damn, I held too long, I was up 70 and then now I'm only up 10. You know what I'm saying? So take your losses um with a grain of salt. You know what I mean? Like, don't, like, go based off of how comfortable you are with the risk to reward. But like I said, just for, if you're a beginner, just trust me, sell early. Don't wait because you learn the hard way. You lose everything you could have gained. You could have, it's like I said, it's better to say, oh man, I could have made that, but I still made this, rather than shit, I lost it all. You know what I mean? But yeah, look up news, look up earnings whispers, read your charts, right? Long term, short term charts, like 1 day to 90 day. Start with solid long term companies like Apple. If Apple's too expensive, there's another company called MFA. It's pretty good. I'll take that one into MFA. You guys can look at that. Right now it's trading kind of high. It's at its all-time high. If after earnings comes out and it kind of, it kind of bottoms at like 380 or something, that's a good time to buy, right? That's a good buy target. What should you do? Maybe hold to the next earnings, or maybe hold till the next 2 weeks or something like that. Because MFA, you can kind of see it has that uptrend, that long-term uptrend since COVID March of last year. You'll see it when you look at it, guys. Um, and options, options, don't do it. That's all I'm going to say for you guys. Just don't do it yet. If you really want to do options because you've been trading regular shares, then yeah, just hit me up, and I'll do another video or something. But for now, just get used to paper trading, or get used to trading with like $100. Like, just practice. So long term, patience. Long term, if you're trading long term, you want to have a lot of patience. If you see the stocks start to go down a little bit, that's okay. I'm only down $10. If you see it start to go down and you zoom out in the 90 day and you're like, oh, it broke that mountain, then you sell it and say, I'll take the $10 loss. But if you see it going up on this mountain, on this staircase mountain up, then just because it goes down, that's probably just the down. You bought it a little too high. It's going to go a little more down. And then it's going to come back up and just ride that to the top, right? But that's for swing trading on companies that have earnings, or companies that you've done your research and they're about to release a vaccine, or they're about to legalize cannabis, something like that. New EV cars being invented, something like that. That's something that you can hold. Even though you're coming at a little bit of loss, you can hold it because you know that that company is going to take off, right? Elon Musk tweeted it, boom, it's going to take off, something like that. Okay, so if you guys have any questions, my Zoom call is going to run out of time. So I have 2 minutes and 30 seconds left. All right. Um, everybody here has Instagram, correct? Yeah. Everybody, you can unmute yourself and kind of let me know, because okay. So if you have, okay, who has questions first of all about anything that I went over? Does anybody have any questions at all? Okay, so Duke has questions.
When will be the next class, bro?
Um, I don't know. We'll see. I'll let everyone know we did this one, and I'll see, because I had about 16 people that said yes for the weekend, but shit, that was my bad. So I actually recorded this and I'm gonna send it to these guys. But so I have less than a minute. Yeah, if you guys just want to go on the next class, no worries. If you guys did though, on Instagram, if you guys had any questions, I can go live on Instagram right now and then answer you guys questions. But the video is gonna run out, so you guys can just still type in this meeting right now. So just text me, just type right now and see what you guys want to do. But yeah, thanks guys. It was I hope that you guys got some beneficial information for you to start trading, and just let me know if you guys have any more questions. All right. Okay. All right, guys. Peace.